pound holds near a two-year high, but for how long? Welcome to Market Insight, I'm Peter Devlin. This Thursday marks a downbeat anniversary for the pound, exactly 2 years since hitting its record low against the dollar at 103.50. The turnaround since then has been quite remarkable, currently holding around March 2022 highs at 133.66 versus the dollar. Sterling continues to be one of the best performing major currencies so far this year. But are there reasons to think that the rally may not last? Well, to help answer that and more, I'm joined by Vicky Pryce, Chief Economic Advisor at CEBR. Welcome, Vicky. So turning now to Goldman Sachs, they looked even more bullish on the pound yesterday, now seeing 140 versus the dollar as a likely level in a year's time. Do you see this as a reasonable outcome?
It's interesting reading their rationale. I think one of the things they're talking about is how the UK has outperformed expectations in terms of growth. Well, perhaps, but if you look at just what's happened in the last 4 months, we've only had 1 month of growth in that 4-month period. And last year, we only grew by 0.1% and we had recession in the second half. So I'm not sure the growth story is particularly a relevant one. But what is much more relevant is interest rates. It's just the differentials. How fast will the US cut from here on, and how slowly will the UK cut? And I think that's what's going to determine whether the pound strengthens against the dollar or weakens. And it's interesting, again, when we heard Andrew Bailey's recent comments, he suddenly sounded a little bit more dovish, if you like. And that immediately led, temporarily at any rate, possibly, to, in fact, the euro strengthening by comparison against the pound. So really interest rates is what's doing it right now.
So keeping with interest rates, and you mentioned Bank of England Governor Bailey comments as well. He said today the interest rates will head downwards gradually. Do you think markets are underpricing a more cautious approach from the UK Central Bank?
I think there have been various times in the past when the markets thought that it would be considerably more aggressive on the way down, but it hasn't materialized. I think there is still a lot of hawkishness in the Bank of England's Monetary Policy Committee, if you look at who makes up the 9 members. And I think that's a bit of a worry. I think the markets are repricing that a little bit. I think we are going to see cuts, though, and at some point they might need to do something more major because the economy is not doing particularly well. I mean, I mentioned already what's happened in the last few months. We've seen some data come out on the PMI, the Purchasing Managers Index in the UK, which disappointed again. This was the flash estimates for September. We've seen business confidence really not doing particularly well. We got the latest CBI Industrial Trend Survey just came out yesterday, which showed that if you look at either domestic or export orders, they don't look very good at all, and output is declining in the last 3 months. So that's not good news, particularly in manufacturing. And we've also seen consumer confidence drop very significantly. So all that would suggest to me that at some point, I think the markets may need to start repricing downwards a bit more aggressively like they were doing before.
Well, one of those forecasts, HSBC, they're seeing rate cuts beginning in November's meeting and continuing in each subsequent meeting starting from February next year. So what's your outlook for interest rates?
Well, yes, I think they will be coming down, possibly faster than what the HSBC is saying, given the outlook for growth. But I think we will probably see them come down by the end of next year, early 2026, but certainly by late 25 to 3.5% possibly. I think we've got a hint of that. I think around 3% is what the Bank of England thinks is a sort of neutral rate of interest rates, which keeps the economy going without necessarily leading to any resurgence of inflation. So I think they will be aiming at that. And if you look at the Bank of England's forecast ahead, in the latest report which they produced in August, they are expecting inflation to be either at or even below target, certainly very, very close to target for the next couple of years. So I see no real reason why interest rates shouldn't come down quite significantly.
Well, Vicky, you did mention those weaker than expected PMIs yesterday out of the UK. So overall, could a flagging UK growth outlook add some fragility to the pound going forward?
Yes, I think that is the issue, if indeed growth has any bearing on what the pound is doing. But I think it's still going to be interest rates. Well, the interesting thing for me is also that at this level of the exchange rate against the dollar in particular, what we will be seeing is that inflation, if anything, will be doing better in the sense that there will be more dampening impacts as a result of sterling strength. So in fact, you could see cuts happen faster in interest rates than would otherwise be the case if the pound stays at this level. And then, of course, if they do happen, then we'll get back to some lower level. So again, going back to the 140 may happen if policies really diverge as much as perhaps some people in the markets expect.
So finally, Vicky, just turning to politics now, Prime Minister Keir Starmer warning of a difficult economic decisions ahead of the Labour Party conference today. Is a belt-tightening Labour budget in October on the cards, and what's going to be the ramifications?
Well, you did mention the impact of perhaps slower growth on interest rates. Well, what we may be seeing, of course, is the tightening that's happening, not just on the monetary, but also on the fiscal side, also accelerating that slowdown in growth by comparison to what would otherwise be the case. Yes, I think it is going to be a concern. Businesses are waiting for this. We haven't seen any real investment happening this year because of the uncertainty on the political side. But now, of course, we have quite a big majority, so Labour can more or less do what it likes. But businesses are worried that this tightening will indeed be bad for them in many ways, and they're not investing. I think the growth that in investment that the British Chambers of Commerce have for business investment in 2024 is just 0.3%. Nothing much hugely happening afterwards, and that's not going to be good news for the economy. So there could be some tweaking of fiscal rules to allow a little bit more public spending to take place and a little bit more relaxation to happen, but remains to be seen.
Vicky Pryce at CEBR, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.